Hello everyone, my name is Vandita and thank you for joining me on my channel today. We have two questions today from Amit Mehra. And firstly, Amit, I'm really sorry I couldn't take up your question earlier. This is a month-old question and due to time issues, I couldn't take it up. I'm really working on my time management skills, so please forgive me on that part. Now coming back to your question, viewers, he has two questions. One is on key resistance level and key support level. He wants to understand the concept and he also wants to understand why is it important for an investor. That's his first question. His second question is around biofuel. He wants to understand that sector a little bit and is it okay to invest in that sector? Okay, so that's his number two question. One by one, we'll take it up. So first question on key resistance and key support level. Amit, it's a brilliant question. Why? Because basics are the building blocks for any informed investor. If they want to take informed decisions in future, this is the right time to invest in knowledge and gain as much as you could, right? And these are the common jargons. These are some common jargons that we keep listening all the time when we listen to news, when we read articles, when we talk about it, right? So everywhere when we look at reports, articles, news pieces, press releases, these are some common jargons: support level, resistance level, buy price, sell price, target price. So what are these actually? Now, let me tell you in simple terms first. We get this question all the time in our mind. How do we time the market? Timing the market is not an easy task, let me tell you that. And it is really unpredictable also because everything is fluctuating all the time. Nobody knew that the pandemic would just come in and sweep in and crash the market, and then how the market will evolve, everything back, and then again coming, everything, we saw a strong rally, then everything falling, crashing, and then again coming back. So, those kind of things nobody is basically predicting. But it's just that resilient investors, they know how it works. How they know? Because they know how to time the market. Now, what is timing the market? Timing the market is you should know when to enter and when to exit. And you can time the market only when you understand a little bit of price projections along with the valuations and how the stock price moves over time. What a technical expert or an analyst would do is they'll say, they'll take a time period. They say it's a 10-year time frame. And what they'll see is they'll read a particular stock. They'll see if the stock was at X level, how it moved up, then it came down, up, down, up, down. And this factors in all the macroeconomic factors, all the economic optimism, pessimism, everything is included into this. And then they come to two major levels for that stock price, right? So there's a current market price of any stock, and no stock will have a linear growth. Only in very rare cases you'll see a linear growth pattern of a particular stock or a company, right? In general, what we'll see it, there'll be a lot of to and fro, ups and downs, right? That is very normal. Now, a technical expert will have two levels. One would be below the market price and one would be above the market price. They'll set two targets. So one below the market price is the support level and one above the market price becomes your resistance level. Now, how is the support level and resistance level formed basically? What happens is when the price of a share, it falls, right? Whenever you'll see a fall from the market price to a lower level, there'll be a little more demand which would be created here. And that demand would create interest in terms of buyers. Buyers would want to buy it, and that creates a support line around that market price, right? Just below that market price. So that forms the support line. Now what happens is, this is about support. On the other hand, if you look at resistance, what's going to happen there? What we'll see is that a particular stock that's going to reach up, right? When the prices have reached a peak, right? There would be some kind of selling interest, right? Because the person an investor who's already having that stock for a long time, say 5 years, 6 years, they want to sell it now and they're looking for the right time to exit out of that stock. So when is the right time? When it has reached its peak. Now this creates a resistance zone, right? So this is support line, this is resistance zone. In layman terms, if I have to tell you, this support level is like the floor of the room, and the resistance is like the ceiling of the room, right? The ceiling of that room, floor and ceiling. And this floor or the support level is like the lowest price level of that particular stock over time, and that's what technical experts have come to. So this was the lowest level at which the stock has fallen basically over time, and that's why this is the support for that particular stock. Similarly, if you look at the resistance, now over time what the experts have read is that this is the maximum level or the highest stock price for that particular company over time. So they have given that as a resistance level or the resistance zone. So this is support, this is resistance. Now everything should go very well if things are always on track. But nothing is hunky-dory. So you have to really know one thing, that it's a volatile environment and markets are turbulent. You'll see sometimes there's some breakouts, right? You'll see stock breaking the resistance and moving up further. You'll see stock falling below the support line. Now, how is the support and resistance created? Now, if we see a breakout in an upward trajectory, right, in an upward movement of a stock, or we see a rally, so that means that the stock price the old resistance has been broken and a new resistance is now created. The old resistance level becomes the support level of that particular stock. Similarly, on the other hand, when there's a fall in the prices, or we see that there's drop in the price levels, what's going to happen is that that new support level, it goes further down, and the earlier support level, that becomes the resistance for that particular stock. But then again, this is like a lot of now there's a lot of technical part involved in it. There's a lot of candlestick involved, and there are a lot of ways of reading this and coming to such conclusions of these prices: buy price, sell price. But why is it important for an investor? If I have to answer that question of yours, then let me tell you why. Because when there's a dip in the market, everyone and the experts, they keep telling an investor it's a right time to invest, right time to enter the market or buy that particular stock. So when anything reaches its support level, that stock reaches the support level, that is the right time to buy that stock. And when they reach the resistance level, we'll see a lot of selling interest there, right? So you'll see a lot of people selling their investments, right, at that resistance level. So that's why support and resistance, they are like boundaries of that particular stock around that current market price. And they play a major role when you want to set up a target for yourself, or you want to do some kind of valuations, price projections. So that's why this plays an important role in terms of timing, in terms of even understanding how the movements are done. I hope that question was well answered. If not, please write to me. I can explain you further. Let's now look at your second question, which was on biofuels, whether it's a good sector to invest or not. See, if you ask me whether it's a good sector or not, it's definitely a good sector to consider. Why? Because firstly, for diversification purposes, it's always good to diversify your portfolio. But on other way also, if I have to study the trends and if I look at what's happening with regards to government initiatives, then we all know Niti Aayog 2025 plans of the government, right? It is very much consistent with this biofuel sector. So what the government is planning to do, already we know that 80% of oil is imported, right? So we are trying to reduce our dependency on fossil fuels, and government is doing their level best to reduce this dependency on the fossil fuels. So they're trying to do a lot of ethanol blending. They want to get into a lot of ethanol blending activities, wherein we can reduce and conserve that fossil fuel part. And also it's good for the environment, because we all know that how fossil fuel it impacts the environment. So definitely on the environmental front also, we'll see for ESG companies and all. It's a good thing to look out at. And also, if you look at this E20 program of the government, clearly they have mentioned about the capacity building in terms of distilleries that they're already doing. So how is it going to impact the ethanol, the industries which are related to biofuels, like your ethanol blending is one of it. So ethanol producing companies would really do well, and we might see a rally on that part. When ethanol blending companies would do well, what it would actually mean is the sugar producing companies would do better, because what we'll see is that the kind of production changes that we're gonna see in terms of capacity utilization, and how much these capacity build up would be done in the future, that would be really a good you can say a good indicator. And we are already witnessing that Praj Industries, for example, it's a sugar company. So they have got some orders from the government. They've got some large supply orders from the government. So that is already happening, and they've increased their production plan also. So just keep studying about, if you're interested in biofuel sector, then I would recommend you to study about Sri Renuka Sugars. They are also planning to, increase their capacity in terms of distilleries, manufacturing, and, other kind of things. So you can look into Sri Renuka Sugars. I really like it. The other thing is Balrampur Chini. That's also a very good sugar company to look out for. And the third is my favorite, which is Praj Industries. I really like the way they are, evolving. There is a downside. So everything has a risk associated. So with the biofuels, the risk is on the EV part. If the electric vehicles really do well, then we will see that biofuels not doing very well. So, but if you have to do a calculated risk assessment, at least for 2025, I don't see EVs really growing so much. So I think it's a very, very good time to invest with regards to, even if we look at collaborative measures, we'll see a lot of countries getting associated with all this, and this will in turn actually help ethanol producing companies and sugar producing companies. So we might see rally in sugar stocks, we might see rally in ethanol making companies. So yeah, that's a good sector to look at. But keeping just one sector in your portfolio is never a good suggestion that I give to people. I mean, at least that's not my way of looking at things. I think diversification plays an important role. So you must have some internal like internet aggregators in your portfolio, Info Edge, IndiaMart. You must have some kind of technology based companies. We'll see artificial intelligence growing up, digital companies getting into track. We'll see Airtel really doing well. So all kind of communication based companies also, we might see some kind of rally on that front, because digital India is also one of our motive. Always, whenever you're looking at trends, don't miss out on government initiatives, because that's something that they fix on, and it really works very well. So I hope it would have at least given you some idea. Yes, this sector might outperform as well this year. We might see some kind of some kind of bullish movement. When I say bullish and bearish, again, I come to resistance and support, just to give it a good ending actually. But on that part, I really hope that this would have answered your questions, Amit. And thank you, viewers, for listening to me. All the very best with your investments. Stay safe. Don't forget your mask, and don't let fear overcome your hopes. Just be informed investor and try to focus on your investments the best way possible. Thank you.